Hello, this is Jordan, and this is your precious metals market update. Today is Wednesday, December 21st, 2016, and in this video, I'm going to talk about the technical outlook for gold and gold stocks. Thank you for joining me today. And starting off, I think the dollar is going to be a big key over the next couple quarters. Secondarily, I'd say the stock market. As I said in my last video, I said that we need to see stock market weakness before gold will come back into a new bull market. And the trigger for that could be a dollar that gets way too strong too quickly. And historically, based on my research, gold has often bottomed roughly 4 months before the dollar has made an important peak. And we don't, we have no idea what it's going to be this time. It could be 2 months, it could be 20 months, it could be 12 months. We have no idea, but I think it could be more than 4 months. If I had to gamble on it, I think it would be more than 4 months, and perhaps quite a bit longer that we could see gold bottom, and the dollar keeps rising along with gold for longer than that 4 month period. But in this chart, we have the analog for the bull markets in the U.S. dollar index, and as we see here, the 78 to 85 bull had a big blow off, and then you had the Plaza Accords and the 1995 to 2001 bull. It was very strong towards the end, but then it kind of made a weak new high. But still, over the last 12 to 18 months, it was still fairly strong despite the weak finish. And technically, the dollar has, as we all know, has broken out of a bullish consolidation pattern, and it's gotten as high as 103. The initial measured upside target is 107, but this should go as high as 120. I mean, it's a breakout from a bull flag. The previous move was 20 points. So, I mean, to me, it would be a surprise if the dollar index did not get to 120. Obviously, it's a question of timing, and at what point does that become bullish for gold? Because I think at some point, too strong of a dollar and or a dollar that's rising too quickly, that's going to become a problem for everyone. It's obviously a problem for emerging markets and the debt that they have. It's a problem for China, who has their own issues that they're dealing with, and it's also a problem for corporations in the U.S. who get. I mean, with looking at the S&P 500, I think it's about half of the sales come from abroad. So a really strong dollar is really negative all around. And at some point, if it rises too quickly or gets too strong, the Fed will be forced to stop hiking or pause for a while. And even during that time, you'd see rates go down, which would be bullish for gold. And even before that, you have to think at some point, if our bonds are going up and the dollar's getting, I mean, bonds going down and interest rates going up and the dollar getting very strong. I mean, for international investors, that could be a better place to park capital because you're getting the strong currency and you're getting more yield. So at some point, the dollar could get really strong. Rates go back down. The Fed is stopped. Uh, that obviously would be a very bullish catalyst for precious metals. So something like that perhaps could trigger the start of the next bull market in gold. But we'll see what happens. But continue to keep your eye on I'd say first the dollar and then second the stock market. Now, getting into the technical analysis of gold and gold stocks, starting off with gold, then we show monthly charts a lot, but this is a quarterly chart. And as you can see, the major resistance is clear around 1330. More importantly, the support, the next initial support is around, we'll say 1040, 1050. You can see it ticked it there in the first quarter of 2010 and nearly ticked it at the beginning of 2008 when we made that top before the financial crisis. So the previous low, that is the next important support target based on the quarterly chart. Now, the monthly chart shows the strongest support in this area is around 975. So that's why I have a line there. It's something to keep in mind. But looking at the quarterly chart, the strongest support is around 930. So my bear market bottom targets would be 975 and then 930, because 930 is the quarterly, the strongest quarterly support, as you can see. And uh, also, we don't show it here, but the 62% retracement of the entire bull market is just below 900, and that obviously is support dating back to the blow off top in 1980. I don't think we're going to get that low. I think it's going to be in the 900 somewhere, but it's important to keep in mind. So again, the targets I'm really looking at 975, 930. Now, next, this is a more of a short-term look at gold. This is the weekly chart. Gold has been trying to, over the last 4 or 5 trading days, it's stabilized a little bit around the 1120s, low 1130s. I thought that in the mid 1100s we were going to see a bounce from say around 1150 back to 1230. Didn't happen. And look, markets, when they're really oversold and they don't rebound, that is a very bad sign that they could crash. I'm not saying gold could crash, but if we get a weak rally here, which it appears we've started, and if this kind of weak rebound continues and maybe gold at some point touches 1150 in the next week or two, and the rebound stays weak, again, we just kind of get some upside but bearish consolidation into 1140, 1150. I mean, that could set up another sell off down to the next strong support, which is around 1085. I mean, there's also some around 1090 to 1100. You can see the blue lines there on the chart. So gold is definitely very oversold. I mean, it was even oversold $20 or $30 ago when it was higher. But the price action is just so weak. I mean, that's when you're trying to find bottoms. Sentiment is one thing, support is one thing. You have to look for those, but you also have to look to start to see the kind of uh, bullish price action. You get a bottom. You know, it goes down a lot intraday, and then you have a very bullish reversal. I mean, something like that. We just haven't seen that. We've just seen weak rallies so far. That's a concern. And also, you want to see that kind of reversal at strong support. So, I mean, once gold lost, I think on the weekly chart, it's about 1158 and 1160, dating back to the end of 2014. Those are the key levels. And so, when gold was it had lost those, and it was clear it was not going to regain those with a higher weekly close last week. Um, it's just negative in that where's the next support? I mean, you're likely to get a bottom at strong support than just kind of a random number, which is basically where we are right now. I mean, we're in between the resistance that you can see with the red lines there, just above 1150, and then the support is much lower, around 1085, 1100. So again, uh, we're obviously not certain of what's going to happen, but just be aware of the scenario that we could get a weak rally here, some weak strength over the next week or so, and that could set up a another dump down to 1100 or 1085, and then at that point you would probably get the perhaps like a 2 month bounce back to kind of set up the market for making its bear market low sometime in the first half of next year. Okay, now turning to the gold stocks, we have GDX here at the top, GDXJ at the bottom. This is a daily line chart, so every point is a daily close basically. And GDX had a significant breakdown, losing the $20 level. We thought it was going to bounce from there because it was oversold and it was holding above the 80-week moving average and the 62% retracement. They're in all around there at 20 in the high 19s, and it obviously dumped below it last week. So we were wrong about there being a rally. Where we are now, GDX is trading closed at 1909. The next strong, I mean, there is some support here at 19, but the next strong support isn't until 17 or even a little bit below. So I would worry that if we get a weak rebound here for the next week or two and it rallies back to 20 or maybe a little bit higher, again, that could be setting up for another sell-off. Now turning to GDXJ, it's a little different, but it had key support at 31.32. It was holding above there for a few weeks. I thought it was going to rally up to perhaps as high as 39, and obviously after the Fed and their tighter policy, it dumped down, lost support. It's lost the 80-week moving average now. It's trading at 28. I mean, the support is at 27, and then there's some a little bit below 26. I mean, these are just not bullish charts. You can't spin it any way positively. They're very oversold, but like I said, the risk of an immediate rally here is that we rally for a week or two and it's a weak rally and we don't get a lot of upside and it just sets up another dump down. I do think that there's still good odds that we're going to see at some point maybe like a 2 month rally, but at this point, I think that's going to originate from lower levels. Same thing with gold. It's more likely to happen at 1080, start from 1085 gold than where we are now, 1120 gold. So, I mean, this market just kind of fell apart real quickly after the Fed. And if you look at real interest rates, I mean, they fundamentally explain what's going on. Interest rates have been going much higher, and that has caused real interest rates to go much higher because inflation hasn't really picked up that much. I mean, the move higher in interest rates has been huge, and so I mean that fundamentally explains the sell-off that we've seen recently and really since the summer. So difficult situation here, but we'll see what happens, how it plays out. But I think that the miners could retest the lows or at least come close sometime in the first half of next year. And I'm already started to look at the juniors that I want to buy that I think can be the best performers in 2017. That's all I have for you today in this video. Hope you guys liked it. You can follow all my work at thedailygold.com. Opt in for my free newsletter there. You get my weekly update every Sunday. You get my most recent thoughts on the sector and some snippets from my premium update that goes out on Saturday. Again, thank you so much, and I look forward to publishing another video update in the days and weeks to come. Thank you.